character, CHOCH. So first of all, obviously by now you all understand what a break of structure is, right? It's just a rally to the upside, a pullback, and a break of structure of the previous significant swing high. Okay, that's fine, cool. Now, when price breaks structure, how are we going to determine a pullback, right? There is opportunity to make money on a pullback. You don't always have to be following the trend, right? So a change of character essentially is just a shift in trend. It's a change of character. So once the market is rallying to the upside on a lower time frame, for example, for us to determine a change of character, we essentially need a, well, change of character, a break of structure. And this happens once there's a new relevant significant low, right? And this is where we'll be identifying a change of character, and we can sell it on the way down towards the previous banker block that took out structure. And that's literally just the play. So let me explain it in more detail. For example, again, for us to determine a pullback, essentially you've got the rally to the upside, a pullback, a rally to the upside. And normally what happens, it rallies and it's constantly making new highs and new lows. But once there's a change of character on the main trend, such as this, and it breaks structure, this is when you can expect a pullback, right? So this is your change character. Normally, what do we get? We get a bit of a QM. We've got the left shoulder, head, and this is our right shoulder. This is why I prefer and I like trading the QM, right? So once we've identified that, this particular move here, this major move here, we can sell it towards a point of interest. So obviously on the lower time frames, we'll be able to see, okay, where is the banker block? What was the banker block that broke structure? Normally it's below the break of structure. It's normally down here somewhere, right? So if we move this across, so what we can do now on the lower time frame, now that we've got a change of character, we can now sell it on the way down towards where the recent relevant break of structure banker block. So we can sell it towards this point of interest. So that will be our point of interest. And with that being said, if we actually highlight our significant highs and lows, we can say we're still bullish, right? We are still bullish on the bigger time frame. So this, for example, can be the 1 minute time frame, right? But this can be the 15-minute time frame. So on the 15-minute, it's bullish, pulls back, bullish, pulls back, bullish, right? But on the 1 minute, it's a different story. On the 1 minute, we've actually had a change of character. We've broken structure to the downside, and we can actually expect a potential short, which is normally where the banker block took structure out. So this is where you'll be expecting some shorts, and then we can sell it on the way down towards the recent relevant banker block. Why towards this level? Because we know that obviously within the data that we find here, there's normally a banker block that takes out structure. This should be your target if you know this is likely going to reverse from there. And obviously you draw your patterns, etc., etc., etc. Now that you've identified this particular structure point, the market has now reversed from here. You would have taken profit, but then guess what? We can now anticipate a change of character again, right? The change of character is just forecasting and predicting when the pullback has started and when the pullback is over. So this was the start of the pullback. The pullback is this, right? If we remove this out of the way, we've got the rally, pullback, rally, pullback, rally, pullback, rally, pullback, rally. How do we determine the pullback? A change of character, right? A break of structure. And then we can obviously go back. Now all of this would be a pullback, so long as it doesn't break the significant low. And then you got another rally, right? Another change of character towards this point of interest, as you can see, more slightly a QM, and you can ride it on the way up. So that's how you can determine a break of structure and a change of character. And you can use this as a multi-time frame analysis to pinpoint exactly where you're going to get in and why, and where you're going to get out and why. Now, if we look at the current example, we're obviously, because the market is still bullish, it's still making significant lows and significant highs. We've got the low, the high, the low, the new higher high. Now we've got a new low. Hasn't broken structure. It can break structure on the way down because it's just a change in character towards the point of interest. But now we're expecting a new high, let's just say somewhere up here. And when do we actually get involved? When we get a change of character on the way down after a point of interest. So here we go. We now have a change of character. Quote is still the same. It's a break of structure, but just on the lower time frame. I'm just typing it down for you so you guys can understand it a little bit better. Sometimes when you separate both break of structure and change of character, it's just a lot easier to absorb. Plus a lot of SMC traders use this terminology anyway. I just always have called it break of structure and also call it change of character. It's just easier to understand because the change of character is just identifying the start of the pullback and the end of the pullback, right? So now we obviously confirm a change of character after the high that it printed out. A change of character was confirmed, a break of structure, which is this significant little low there, went to the point of interest, and now it's gone all the way down. And now guess what? It's now made another change of character, meaning it's time to get out from the short and get involved in a potential long. And where do we get in? Most likely a QM. And on the lower time frame, you can just hold it on the way up. And we know there's going to be a rally to the upside. And now obviously, if you're expecting a target there and there's all of a sudden a change of character, that's a signal to reevaluate your analysis. Because obviously, if this is indicating that perhaps this pullback on the way up is over, this could definitely signify there's a good chance that price might not even go to your point of interest and it might continue going lower. So it's a good signal to come out as well. And now if we look at what's actually happened, okay, it never really went up towards this high, but it still made a new high. Notice how it still made a new high of the major significant swing point, which is this area here. So it still made a new high. Fine. We are still bullish. As you can see, we're still bullish. So long as it doesn't break this previous low, then fine. This is our signal to either get out, bank some profits, or even enter on a short-term short. Now, obviously, because the bigger time frame is in fact bullish, as you can see, this is the bigger time frame. This could be, for example, the 15-minute. All of this is a 15-minute. And if we're on the 1-minute time frame, really we should be looking for buys. So when we are on the buys, such as here or here, for example, we hold it for more than, 4, 5, 6 R. But obviously when we're taking shorts and it's a counter trend, counter trade is when you're catching a change of character, the end of the large rally. So now we're expecting a pullback. So the pullback is a counter trade. This is where you need to be in and out. Catch 2 to 3 R, keep it humble, be consistent, and it's just a lot easier. Even though, yes, this is your target potentially, but if you are taking a short here for whatever reason on a QM, short-term trade, fine, 2R, 3R, 4R, it's fine. As long as the technicals are aligning with your exits, try not to be a hero and bank all the way where you're expecting it to bank. Obviously, every now and again, yes, you will, but most likely your stop losses will be quite tight. So just be conservative, right? If your target is 6R, just be happy with 3R, right? Because what could happen, because there's a counter trade, it could easily go to, for example, I don't know, it might even go to a liquidity pool somewhere, right? Let's just say there's a liquidity pool here somewhere and you're holding your trade here, but it taps the liquidity pool and then it just completely rallies to the upside, right? So you need to be using your exit criteria to just come out at a conservative area. Don't always aim for the main obvious TP. Just make sure you're banking on the way down aggressively. And yes, if you've got this as your TP, fine. At least bank 20% of what was remaining and bank at least 80% at a very conservative TP. I would say 2 to 3 is enough. Honestly, 2 to 3 is enough. It's pretty decent anyway. So in this example now, okay, we've taken short at this point of interest. And this point of interest, we're still bullish on the 15-minute time frame. This is the relevant low, relevant high on the 15-minute. Essentially, what we're trading is this move here on the 15-minute, for example, right? So now this current move that we've got here, 1, 2, 3, 4, 5, 6. We're on the 7th move. We're expecting an 8th. Okay, so that's really what we're trading, right? That's exactly what we're trading. We're expecting one more high up here, for example. But then what do? If we're in a short, fine, take profit early. But if you're looking to get involved with the main trend, wait for a change of character. Wait for what I call confirmation, right? So, okay, sold it, it's pulled back. Then it go to the point of interest, still no trade. Triggers a point of interest, still no trade. Boom, change of character. It just broke structure. Or really and truly, it's a change of character, which is obviously this one here. There we go. We've got a change of character. The change of character is just signifying the end of the pullback, right? This is the pullback. This is breaking structure. This is the end of the pullback. So if you see a change of character here, it's the end of the pullback. If obviously price has been rallying, and you see a change of character here at the very, very top, then you know that's the start of the pullback. So now that we've identified the end of this pullback, we can then look for potential longs. So what do you have? You wait for confirmation. Confirmation has already come anyway, as you can see. Hold on. There's a bit of a QM. It's broken structure, broken the pattern. There's a change of character. This is a confirmation. Catch the entry here somewhere and there. Back to the trend. And then you can hold hold it until you see another change of character, right? Such as this, and then boom, change of character, take your profit, most likely on a little pullback, and then you can look for shorts at the QM. And then you just keep on repeating the same thing, right? That's literally the best way to approach breaks of structure and change of character. Now, what if the trend completely reverses on you? Okay, let's see what happens. So price is obviously rallying from here. You've identified a trend, and then it just doesn't really reach up to this significant previous high. And then there's a change of character here. With this here, there's a change of character here. So now that there's a change of character on the way up, this is why we want to be banking at TP1, right? This is why we have TP1s. Let's just say this is our TP1. Yes, fair enough. Our main TP may be up here, but we want to have TP1s at either the equal highs, imbalance, or the 1111. If I haven't done the 111 video yet, you will understand what I mean at a later video. If I have, then you know what I mean by the 111 exit, right? So this is why we want to be banking profits at TP1, because the market can reverse. It doesn't have to go up forever. It could easily continue going down. So let's just say you've banked some profit, there's a change of character, and then it pulls back. And then what could easily happen, it can just go low. And then boom, what happens here now? There's been a major break of structure. And what do we do when there's a break of structure? You know, there's going to be a pullback towards this banker block. So now that there's a break of structure of the main significant low, which is this one here, now we know that we're expecting a pullback towards the banker block. So we know we can wait for sells, right? So we obviously wait for confirmation such as this, and then you get that confirmation, you get that change of character, and then boom, you've got a new trend, right? And we know that this is now your new significant low, your new significant high, and you're just targeting the new lows. Okay, but you can still anticipate the pullback if there's a change of character, right? So it's broken structure very convincingly. It's pulled back, the market's dropping, found a new low, and then boom, a change of character on the lower time frame, right? With that change of character, what do? You can then buy the market. You can buy the market on most likely a QM. Now that is broken structure. This is now the new trend, and now we're expecting a pullback towards the point of interest. Obviously, this will be momentum. Correction will be a break of structure. We're expecting a pullback, and then boom, we get involved in a long, and then we take profit. And then what do we do again? Change of character, confirmation, and we can sell it on the way down. And you just keep on playing this game like it's ping pong, honestly. Just keep on following this methodology and rules, and you just find trading to be a lot easier than it should be, honestly. It's just very, very simple. If you just wait for confirmation, quote, change of character, be aware of the main trend, right? What is the main trend? Such as this here, this is our main trend. Let me just do another. Just be aware of the main trend. For example, this is the main trend on the 15-minute, for example. Rally, pullback, rally, pullback, rally, pullback, rally, fail to make a new high, messes around a little bit, and then boom, breaks the significant low on the 50-minute time frame. So now we've got a rally to the downside. We've now got a pullback, and now we're just trading the same thing. Just trading the same thing over and over again. But notice that within the larger time frame, in this example, if we're looking at the 15-minute, ignore where it says euro 4 hour, ignore that. I'm talking about the 15-minute. If we're looking at the 15-minute, such as this, and this is the 15-minute, within the 15-minute, you should be looking at the 1 minute time frame for the change of character, and use that to your advantage. With a counter trade, right? The counter trade on the 15-minute time frame, for example, are these moves here, right? These are your counter moves, because we're breaking structure to the upside, So the counter moves, be more aggressive with your TPs, come out a lot earlier, less risk reward. Normally 2 to 4 hours is like the sweet spot. But if you're actually on a long, on the 1 minute, you can actually hold it a lot longer, right? This is where we aim for the 5 to 10 hour multiples. And every now and again, we do hit those 20 hour, 30 hour trades, right? So this is the best approach to really identifying break of structure and change of character. Now let's look at this example. So the multi-timeframe break of structure order flow, right? So we're looking at the H1. Obviously, every time frame is going to be different. If you're a position trader, swing trader, then really you should be looking at the weekly, the daily, and the H4, right? As scalpers, day traders, just short-term traders, really we should be looking at the H1, M15, and the M1. So in this example for all the day traders, we're looking at the H1. This is our main move. On the M15, it's going to look a little bit different, but it's the same thing. You're going to see pullbacks, rallies and pullbacks, break of structure, etc. etc. And within the 50-minute time frame, you're going to see these schematics and these fractals, right? Still going to be the same, but there's going to be different change of characters and different breaks of structure. So let's say, for example, we have this area here on the 15-minute. Let's just say you've sold the market on the 15-minute. The break of structure here, right? Break of structure, quote, it's a change of character because it made a new low on the 15-minute time frame after the rally to the upside, which is the equivalent here. There's a rally to the upside. This is the 15-minute rally to the upside. It just looks a little bit different, right? But on the way down on the H1, you can take opportunities for shorts. Why? Because there's a change of character on the 50-minute time frame, and you can look for sells, and you can sell it all the way down towards a point of interest, towards where your technical analysis is going to indicate where is price likely going to reverse from. Obviously, if you're looking at the H1 or the M15, there'll be a banker block here, and it'll just be the same here. There'll be a banker block here. That banker block is also the same on the 1-minute time frame, right? So you can be looking for shorts on the M15, which will look the same on your M1. It will be up here somewhere. There's a breaker structure on the M1. Then to follow the trend, you look for confirmation. So let's assume we're looking at longs on the euro. On the H1, you wait for confirmation. Where do we get confirmation here on the 15-minute, right? The confirmation is a change of character, and the change of character happened here. There's a break of structure. So if we move this out of the way now, so if we're looking for longs on the Euro USD on the 50-minute time frame, you can see that the confirmation was actually here, right? Break of structure on the 50-minute time frame. This is your entry, right? This is your entry on the 15-minute. Obviously on your M1, the change of character happened here. New high, entry, right? It's the same fractals, same concepts. They're all going to be exactly the same. It's just going to look a little bit different, right? So just to re-emphasize, we've got the rally, pullback, rally, pullback, rally. Over here, we've got the rally, change of character, break of structure on the 50-minute time frame, slash also the 1-minute over here. The change of character is giving you the green light that there's going to be a pullback. Then you've got the rally to the upside. You've got the rally to the upside, a change of character here on the 1-minute time frame, right? As you can see, look, there's a rally, pullback, rally, boom, change of character. It's a signal to tell us there's going to be a pullback towards downside, most likely to a banker block here to the left, which took out the previous structure. So we can sell the market, we can buy the market. On confirmation again, we can buy the market. Even this move here, right? Even this move here, from this significant low to the significant high, significant low to the significant high, significant low to the significant high. Within this H1 rally to the upside, you can also sell and buy the market. Why? How? If you just see, look, a new high, broke structure, change of character, you can sell it here, short term, sell it short term, goes to the downside, goes to a point of interest. So this change of character and this mini fractal, this mini pullback on the M1, you can take advantage and you can sell it in the middle of an uptrend. And then obviously when you get that confirmation, if you look left, boom, you can ride the wave again, right? So you can, within a large leg, you can also sell and buy, sell and buy, sell and buy. This is literally how you see me trading the markets on a weekly basis, just playing ping pong, buying, selling, buying, selling, buying, selling. And I don't really care about what the larger picture is telling me. Well, actually, essentially I do, because it does influence how long I should hold my trade. So if the larger time frame, for example, the H1 / the M15 is bullish, then I know that if I'm looking for shorts or if I see a short opportunity on the M1, I know I need to be in and out quickly. Aim for 3-4R and I'm happy. 2 to 4R is a sweet spot. Then obviously when there's a confirmation and there's a valid setup on the way up, then I know that I'll be holding that for 4, 5, 6, 7R for TP1, because I know the main trend is actually bullish on the M15. So put everything together, press pause, rewind the video and really just backtest this. Okay, let's look at this example on the euro. We've got obviously a clear breaker structure. We've got the relevant low and the relevant high. So essentially we should be looking for buys, right? Until we get a breaker structure over here, right? So if we actually rewind this to the point where it breaks structure, there we go. There's our breaker structure. So we know we're bullish, right? So we're bullish. If we go to the 50-minute, we're still also bullish, but we know that there's going to be a bit of a pullback, right? So can we spot a change of character, right? Let's see if we can find a change of character. So when we identify the breaker structure on the H1, if we're looking for the pullback, we know this is the start of the rally, but on the 1-minute time time frame, although we've identified a significant low, right? We're expecting a pullback. We still don't know where it is on hindsight. Well, we do know that because I just showed you the replay button. But if you imagine, and this is a live setup, on the way up, yes, we're bullish, but at the same time, if you follow the structure on the M1, for example, significant high, significant low, break of structure, which happened more or less over here, then you've got a new high and a new low. So you're still looking for buying opportunities. So obviously, yes, there's a buying opportunity here. So even better, right? Nice little buying opportunity. Obviously, you look for your patterns and your boomerangs, etc. But this is just an example on market structure. So okay, there's a buying opportunity there, and then what happens? It breaks structure on the M1, makes a new high. This is a new low, and again, rallies, makes a new high up here somewhere, and a new low over here. Low probability low because obviously there's only one counter candle, so I'll prefer to use this one to be more conservative. You can still use this one, but just note that it's just low probability. Now, okay, again, it made a new high caused by this significant low. So we're still bullish. We still hold a trade. If whether you're buying it or you're holding it, this is going to tell you to just hold it. It's going to give you that confidence. This is why we hold trades with the trend. So let's see if there's a change of character any moment now. The market's rallying. Still, all of this to me personally is just a liquidity grab. Nothing clear as of yet. Here we go. Rallies stuck in the range. Rally, still liquidity grabs. Left, right, and center. Fast forward a little bit. Still going. Oh, nice. Okay, so liquidity grab. This candle for me personally is enough for a break of structure. Right, that's enough. So where is our significant low? We're going to put it right here because there's more than one counter candle. There we go. And now we've got a new high, which is over here. And notice how the range is also nice and tidy. You don't want a big range. You want to wait until there's a small range such as this. So, okay, so we're still bullish. Still bullish. This is a liquidity grab. This is also, to me, still a liquidity grab because notice how it's only this body that closed above. It's just not enough. This is obviously just the mountain, and this is the tip of the iceberg, if you understand what that means, right? So still a liquidity grab, still within bullish structure. Fast forward it, still a liquidity grab, nothing convincing yet. Oh la la, look at this. There we go. Change of character. Brilliant confirmation. So now this is going to indicate that the H1 and the M15 has now finished his rally, it's completed its run. Now we can anticipate the pullback. So this initial move here from the significant high, we're expecting now a pullback towards probably a point of interest, which is more or less down there. So now we can be looking for sells, right? So this is where you anticipate the shorts. Obviously, it will probably trigger some time. Obviously, you need to wait for your confirmation, wait for your patterns, etc. Right? We're still within this new sort of bearish range, which is more or less over here, but we are now in bearish territory. There's a change of character. There's a break of structure on the lower time frame. Still change of character. This is just spikes to scare everyone. We're still fast forwarding. Oh, now there's been a sudden move. Now there's a new break of structure, right? New high and a new low. Let's move this out the way, right? So obviously the H1, this larger move is still part of the rally. So we can just move it here until there's a change of trend really. Because if we go to the H1, you're going to see it's just a bunch of spikes and liquidity grabs as well, right? This body here is not significant enough to tell us the trend has reversed and there's been a change of character. So let's press the play button again. So notice how there's a clear break of structure to the downside, which happened over here. Nice, solid conviction, beautiful trade. Short, and obviously the retest probably at the banker block. Nice change of character. And if we fast forward it one more time towards, let's just speed us up to the 15-minute time frame. You can see now the trend has really just reversed. So now with the H1, we know that this is potentially our point of interest where price could potentially reverse from. This is obviously the start of the pullback. All of this is the rally, pullback, rally. How are we going to identify the pullback? Wait for the change of character on the lower time frame. Obviously, it happened here somewhere. So you could have looked for shorts, could have got tagged in and tagged out. Then it made another little sneaky high, but then there was another break of structure. You could have got in. And now with the change of character, signifying the start of the pullback, we can now sell it on the way down towards a point of interest. And obviously, we need to be using the BOT patterns. Otherwise, if you don't use the patterns and look, two things. If you don't use the patterns and if you don't don't wait for confirmation and a change of character on the lower time frame at this point of interest, for example, then you'll just be your typical SMC trader taking many trades, losing a lot with a low win rate, still very significant high risk reward, but you'll be taking lots of losses. This is why we wait for a change of character, a pattern, confirmation, and your confluences such as the QM, the equalos, the boomerang, etc., etc., etc. Because if you don't, this happens, and that's it. You know, game over. You'll take a loss there, which is fine, right? And then you just repeat the process over and over again. You know, okay, on the H1, significant high, significant low, broke structure. As you can see, now we've got a new significant high, significant low. We're expecting a pullback towards a point of interest, but on this pullback, we can still also sell the market, because on the lower time frame, in the 1 minute, there'll be a change of character. So you can sell it and you can buy the market, change of character, etc. So you can buy it, sell it on the way up and also on the way down. So let's actually speed this up, see what actually happened. Let's delete everything, make it nice and tidy. Here, the market's just been dropping, and in the end, it did in fact go to at least this sort of banker block. So yeah, just a quick update on the video on identifying breaker structure and change of character, and when to enter a trade, when to avoid it, when to hold your trades longer, when to be conservative with your take profits. Just make sure you identify the trend, whether you're entering with the trend or you're doing a counter trade, still both valid. You're still going to find amazing setups. Even myself, when I'm taking a trade, for example, here, and I'm looking at the 15-minute, new high, new low, new high, new low. Yes, I'll still hold, you know, I can still catch trades that are 20R on the way down, but I'll make sure to be banking around these areas at TP1 in the event that there's a small pullback and it continues going up. Such as this here, look, rallied with momentum, pulled back a little bit and then rallied. You know, it could easily happen here. Rally, small pullback, rally. This is why I'm always banking at TP1 a large amount, but that TP1 is normally on the counter trade, yeah, 2, 3, 4R is enough. And then yes, you can leave the rest running. But once you're taking a trade with the trend, right, such as this one here, rallied, pulled back, there's a change of character, break of structure on the lower time frames. These are the ones that I'll happily hold to 10R and above. And on that note, hopefully that has made things clear and you can just make a note, add it to your arsenal and backtest this.